right, let's jump into things. Where we at? It is 10:40, 27th of August. So coming into the end of the month. And I guess probably maybe we could start to see a little sort of bit of sort of end of month flows and that. I'm not quite sure what direction we could be sort of seeing this stuff going in the moment because it is really just choppy out there and that. It's end of the summer as well, as I keep sort of touting every sort of day or second day, because I think this stuff will probably start to clear up a little bit, sort of maybe come next month and that, or hopefully even for sort of after. I'll say after next week, because next week, of course, we've got all the jobs numbers. We've got NFP, ADP, JOLTS, these kind of bits and pieces. So that's really, I think, going to be sort of what rocks the market. And it's funny, like a while ago, I used to sort of say it a while ago, it's probably go back a year or 2 years at least now. And I used to sort of say NFP was that one that could kind of almost like sort of define the month for the trading. Sort of like, so it would just set the trend and we kind of see this thing sort of run through. Obviously, it hasn't been so much of the case in that. And I think that is more a sort of testament to the sort of dual mandate that we see the Fed sort of playing with. And like inflation has just been such a sort of hot topic or hot button topic, whatever, whatever the comment is, issue for so long that, jobs has really been taking a back seat. And that's why NFP, oh, look, NFP is still going to impact the market. It's not like they ignore it, but there used to be a good sort of rule of thumb that, NFP it would sort of fly around. Like CPI when it drops, and I'm talking US CPI here, when it drops could like bang, it just goes like a stone and that, and okay, there's the movement. NFP like will just bounce back and forward and back and forth, back and forth. And the rule of thumb was like don't trust the first move. It's definitely going to fake you out. Wait 15 minutes and then it'll show you your trend. And it just hasn't really sort of been a massive sort of driver, in my opinion, in that sort of over the last year or so, pretty much. But now that sort of Powell sort of swapped his sort of rhetoric and sort of is saying, hey, look, you know what, inflation, not so stressed about this and that, jobs are really the thing. And this is the thing, he gave us a little bit of a heads up of that a while ago. I think, was it not this register, maybe the press conference after the two FOMCs ago. And he sort of said that, look, you know what I mean, inflation, it's going to be coming. This is what I'm still worried about. This is why we're taking the cautious approach. But, the thing that could swap me, the Achilles heel in the situation could be the jobs if that gets bad. And, jobs, again, it was bad, but I think it was the revision that really sort of smacked people about and that. And, now we sort of come out at this latest Jackson Hole and said that, look, you know what? Jobs. That's the main thing that we're kind of looking at. And you saw the market just jump off that because, as I said, they've got different approaches in that. Like inflation, if inflation's up and that's the issue, well, you need to hold the rates higher. And that's why sort of like, I mean, even in saying that, we've still got equities at all-time highs. But, the idea there, and also US dollar at the lows, I might add. But, the idea with that is that rates are higher while you're trying to sort of combat the, so one sec. Jeez, well, I need another coffee. Sort of yawning into this thing. You need to have the sort of rates higher to sort of combat that inflation potentially running out of control and that. But if the jobs are at the forefront, well, and that becomes quote unquote sort of bad, you're looking more to sort of lower rates to combat that situation. And this is why it's important to understand the difference between the two mandates and how the sort of the central bank will sort of approach it. But as we've sort of seen, like, markets sort of jumped off that kind of stuff. We've had the pullback, we've had the second push now, and it's really just in a bit of sort of no man's land. Look, US dollar recovered very well. Then of course, we had Trump sort of firing Cook or something, this lady from the Fed. And then that sort of saw the US dollar drop off yesterday. So there's a whole bunch of stuff going up and down. But realistically, look, I'll move on to the charts in a moment. But just to give an idea of it, like we're just in a big range at the moment. It's the 4 hour here. Choppy as all hell. But this is just a range. And this is what I said on the weekend video, the weekend analysis, that, if we were down here, this is how we'd see it, potentially to move up, and it would just be this. And this is exactly what we're starting to see. So we're starting to build a bit of a sort of box that we can sort of call through here. A little bit of an overshoot to the top, a little bit of an overshoot to the bottom, But more or less, we're back in our little breakout box. And I'll get to that in a moment when we get onto the charts. But of course, Aussie CPI, that's the one for the at least for the Asia session that we'll sort of be looking for. But yesterday, just quickly recapping it. So on Asia Open, we had, I think, just as I was finishing that video yesterday, we had sort of that headline that sort of Trump had fired effective immediately that Cook person, and the US dollar hates any sort of intervention from Trump. Like there's all this sort of talk about sort of, oh, you know, they could disband it and all this kind of stuff. Look, I don't think this is necessarily going to be the case. Look, I mean, look, it's outside, as the people would say, it's above my sort of pay grade kind of thing. But you know, it's not what I would see sort of moving forward. But who knows? You know, we'll see what they play it. There's no point speculating with that. But the point is that anytime that Trump sort of mentions, oh, I'm going to fire Powell, or you know, he does any sort of interfering with the Fed, US dollar sells off like crazy because you know Trump wants a weaker dollar. Like he said that pretty much from the start. He wants rates down to make it sort of more competitive. So anytime that he sort of intervenes is kind of pushing it towards that direction, and that's why the markets just dump US dollar every single time. It's a knee-jerk reaction. You know, we saw it recover that sort of level yesterday, but as I showed a second ago, and I'll show again in a moment, it's just bouncing around like a little ball and that. So, you know, just trade the ranges at least at the moment. But that was the big sort of impact sort of through the day. We had the sort of monetary policy meetings. They basically just sort of said that, look, it wasn't necessary for them to go any harder, to sort of go to that sort of 50 base point cut or any sort of consideration there. Aussie dollar sort of sold off on it because we know that they're basically saying, look, there's going to be more cuts coming. The thing is that it's at this point they didn't see the reason for it to sort of go to 50 base point to go anything too drastic. You know, international sort of issues have sort of seemed to have abated sort of for time being. I mean, it's all very well. It's not a big market mover kind of thing. We kind of knew all this stuff anyway. Aussie dollar sold off. It held where it needed to held where it needed to hold, which is at that 64.70 level, and bounced back up. And again, it's the same sort of thing. It's really just sort of consolidating at the highs of that bounce. CPI coming out today will probably give us a little bit of direction. See, so it's at the moment it's consolidating near the highs, and we've got an expectation of this coming in quite a big jump up. As I said, like you know, going from 1.9 to 2.3. Look, it's still in the band, but it's certainly you know moving up kind of thing. So that would be a little bit more supportive in a bit more Aussie dollar strength. But again, these kind of things, it's only running off what's happening with the US dollar. That's all very well for us to have a 1.9 to 2.3 or 2.2, 2.1, whatever it comes in at. If they start to buy the US dollar up, this is not going to hold Aussie. It's just going to maybe hold, like, you know, it's not going to sort of, it may hold up Aussie a little bit, but only hold it up from going even further down, if that makes sense. It kind of retards the move a little bit. But that's the big one we're looking for there. A little bit of US data. Actually, I should go in this in order and that, just sort of covering that just while we're on the topic. But durable goods orders and that sort of that actually beat fairly well overnight. And then we had the month-on-month orders here. This is the one that sort of said it's in a bit of a grey area because it's obviously still a negative number, but it's improving and improved better than they thought it did. So both sort of US dollar positive bits of data there didn't really seem to impact the market a great deal whatsoever. They didn't sort of like, you know, I mean, US dollar kind of dribbled down through the US session while we saw equity markets sort of bounce back up to the highs as well. Move along, we have manufacturing. Again, same sort of thing. It's you know still negative, but better than expected. So these are still ticks for the US dollar and that. So even though there's still negative numbers in that, it's like you got to think about it as in the market's pricing for this. Anything that beats that, well, okay, in theory, you know, you peel back a bit of the position and that accordingly because it's not as bad as I thought. And then we've got sort of consumer confidence, which was down, but not down as far as it could have been. So a bit of a choppy lot of data there. I mean, everything sort of is still expected a fairly negative kind of sort of number with it all, except for the durable goods month on month. But came in a little bit more positive. And as you can see, this is why they've put them in greens for it all as well. All right, moving forward. So as I said, CPI for Aussie is in what 40 minutes now. Sort of see how that sort of impacts market. As I said, look, I don't think this is going to be the big massive driver at the moment. I think they're still going to be cutting no matter what this number comes in. I don't think they're like inflation's just going to rear its head straight up again. Look, it could impact the market, but nothing. I'm not expecting much more than a knee-jerk reaction. I.e., if it gets pushed up, I think 65 looks like a level for it to hold. Above 65, 65.10, if it can hold up above there, you may see a little bit of a push up, but for now, I think this is going to be just knee-jerk reaction kind of stuff. And particularly if it doesn't come in at this higher level and they buy the US dollar up, that's when the good short Aussie will come in. It needs this to sort of come in a little bit hotter to at least keep it up around that sort of high 65 level. If this comes in a little bit lower, so again, market's pricing for 2.3%. If it comes in at 2 even, look, it falls in that grey area. But the thing is, in theory, they're pricing it for 2.3. If it comes in at 2 or 2.1, or 1.9, so it doesn't come up at all, plus they start to buy the US dollar up, even within its range, then you could see some pullbacks back down to that sort of 64.70, 64.80 kind of levels in Aussie. So that's definitely the one to watch through Asia session. Apart from that, nothing really of note, nothing too interesting. Got a speaker, tentative, boring. That's New Zealand, capital expansion, that's tomorrow. So, yeah, that's pretty much all that's on the docket for now, and that's just the Aussie CPI. Going through the rest of the week, I mean, not that I need to cover it too much. We've got GDP there and PCE. So there's a couple little bits of data, but midweek CPI, that's the one on the docket. All right, sweet. So let's have a look at the charts and that. And so back on DXY, like I said before, it's starting to get a little bit choppy. A little bit messy. This chart here. So let's have a quick look at what's happening. So as I said, we've got pretty well-defined little high and low here, and then of course we've got these little levels that it seems to be respecting time and time again through here. So let's drag this one across. You can see this just confirming this level here. So that's your downside level. Should you want to go back down to, there's my little arrow, test the bottom, that's probably where we're sort of looking underneath, at least sort of intra-session. With this as well, you probably could actually sort of see some sort of bounce through here. As you can see, the market's been holding this stuff through here a little bit as well. So, yeah, but I mean, again, this is the thing, and it works both ways. That you've got all these little levels that it's chopping around, but all in all, it's holding this as a higher low at the moment. I mean, technically this came down here, but look at the reaction. Straight back up off that. And that was, again, this was the headline. And this is what I sort of say about these things. Like, if it's a headline, you get a reaction, but it's not what I call landscape changing, because it's all just, at the moment, remember, it's just speculation. It's just people sort of going, wow, okay, now he's talking about jobs. Jobs look bad. Well, that means more cuts. Dump it down kind of thing. Then over the weekend, we go, oh, hold on, wait. Yeah, I get that, but he hasn't actually done it yet. And back up 78%. So, it's just chopping around at the moment. Move that back there. And really, I think till we get a break above these highs over here, or a break below these ones over here, that's when we're going to get bigger directions. That here. That here. And even with these ones, I mean, we're running into the next levels very quickly as well, of course. But the point is that sort of like you've got a little bit of a sort of test out the top. Obviously, you got smacked back down with the change of topic. But, it tried to push back down. That was that Cook comment. Recovered. Tried to push down again. It's recovered. So this is shoring up to be quite a strong little support. Hence this arrow sort of coming down here. I think if you fail down underneath here, we're going to the bottom of the range. I don't think this is the case, but again, this is just planning for it. Let's do the test. Should have come down to this level here. as I said, I don't think that's the case. I think basically what we're going to do is see it's one test, two tests. I think this will probably come back up and test over these levels over here. That's pretty much what I'm sort of looking for and move up around these levels. So if we get onto a lower time frame, you can almost sort of see this, where was it? Almost like a little bit of a sort of intercession, sort of very wonky, but work with me, head, inverted head and shoulders. As in, you can see the buys, this buys are just here, buys are here, and they moved up here now. And a little bit of a neckline through here. So this is the little sort of what you would kind of call like a little bit of an inverted head and shoulders neckline. So above 98.38, you're probably looking for a little bit of a move. Doesn't mean it's going to be bang breakout over here because it's just a little smaller section of it to potentially be this sort of like inverted head and shoulders. You'd really only be looking at something possibly about this level here. And again, this is more just an intra-session kind of trade, which kind of takes you back up to a body fill of this level over here from last night. But again, these things, it's enough to sort of at least get other things moving back to the bottom of their ranges. And we just sort of keep on dancing around for now. But at the moment, this looks like the RSI wants to, we had a little bit of a gap up. Didn't quite close, it got very close. Depends what time frame I suppose you put it on, but no, to me that hasn't closed though. That's a little gap. Anyway, I would say this has probably got, certainly if we get this alert coming through here, look for that little intra-session inverted head and shoulders, which is a little bit of a zone, pretty much lining up from over here. So 99.48, a close up around here. So you close up 98.50. That could be something interesting because obviously it came up here. This was end of Monday after the bounce up to the 78%. That Cook comment or action, whatever, smashed it down, recovered again, sold again. So again, a close up around here might be interesting. So let's just put an alert here anyway. H4. Not really interested in anything much lower. So yeah, I wouldn't be surprised if we see this sort of spin around. It's got a little bit of room to move on the RSI. If you jump it onto that 1 hour as well, it looks like it wants to sort of continue up through here. It has been sold down here a number of times, and this is why you want to sort of clear out of these wicks to sort of to get above that level there. But that could give us a little intra-session trade for sure. If you have a look at Aussie as well, this is thing, as I said, it's just bouncing through this range here. If we do see that little push on US dollar, well, I mean, yes, I know it's DXY, but excuse me. The thing is, as I was saying, if we get a cooler CPI and you see US dollar run a little bit, then your trade is pretty much probably going back down to test these 64.70 levels. RSI looks like at this stage it wants to sort of cool off a little bit. This again just on the 1 hour, 4 hours just the same. It's unable to sort of get through this level here. So at the moment it's actually sort of consolidating near the high of the bounce. So if you were sort of looking sort of long on this thing, you could be going, oh well, hold on, wait, isn't this like a flag? And that would be taking you up over here, and that's a possibility. I just don't think it is unless you get US dollar sort of sell back down to the bottom of the range. And this is the thing, this is how you can kind of see, like, I mean, obviously there's other factors involved with Aussie, but if you see the market as a broad sense selling off US dollar, well, they're going to be selling it against the Aussie as well. And that could be the time that you get a little bit of a break up through here. But that's not my first case scenario at the moment. I would say probably more likely you're just going to see a continuation of this range, potentially with a cooler CPI, and if they buy up US dollar, just sort of continue this back down to 64.70. Look, we could get a high print, and this could definitely push out the top here. If it does push out the top, I'd probably be looking around this sort of 65.20 level, and to see what happens around here, see if the sellers or people try to take profit through this level here. But for now, I'd probably say that's your box that you want to see a close outside to get any real sort of direction. I think till you get a close outside here, we're not going to get direction. It's just going to continue for a bit. Move along. So we got gold. Gold actually sort of recovered quite well. A little bit of a sort of like as I said, moved quite strongly. Then where was it? I think this is the sell down yesterday. That's right. Yeah, sort of covered this yesterday. It had a bit that. This is the range that we were looking at. So this is what I was saying. Gold is very known for this kind of sort of price action. Range drops down, closes out here, and then bang, shoots up at the top over here. So it's actually on the front foot again for a bit because gold's been sort of lagging a little bit, and in theory it looks like it's kind of attempting to break out of this triangle. It depends where you cut your triangle. Some people say, okay, well this one's a higher line, so that would be your triangle here. I mean, you can, I suppose, but to me, it's a little bit of a tough one here. Oops. Seems like the microphone or headphones is about to cut out, so hopefully we don't lose sound. Anyway, long story, cut through these ones quickly. Definitely seems to be sort of pushing forward, or at least to sort of come out the top over here. It's kind of been met with a little bit of selling action, and that's straight off the bat here. But you'd sort of think once you're this close, I mean, a test of 3,400 would seem logical, particularly to sort of see if there's any stops or something up around there, even if it were to sort of come down over here. Um, if we get onto the lower time frame here, you can see it sort of really jumped off that Cook talk yesterday. And that was the thing. It sort of broke down here early, closed, looked like it wanted to come back down. So it's hard to make the calls of these things, but at that stage, none of this existed. So this was all that we had to go with the market. And the market was like, you know what? Given everything at this moment, let's sell it down, bang, and move it down. So either this was a fake out and they knew that sort of that Trump headline, Cook headline was coming, and they're like, hey, let's stop people out first, or it was just sort of like hey, look, you know what? Given everything, we want to sell it back down. This is a level that was sort of picked out over the weekend. On the weekend, I was looking for so to 33.50. It came down. I think we got 33.51, so within $1 of that stuff. But point is that sort of like they were selling it down, then all of a sudden the headline comes out that hey, Cook wants to Trump wants to fire this Cook person, and bang, market jumps back into gear. Now, the reason I point it out like that is because it's got to ascertain, like, is that enough to sort of say, hey, look, before we had this headline, we wanted to sell it down. Yes, it bounced off a technical level, so that's fine. But is that enough to sort of say that, hey, look, we want to turn the whole thing around? Or is that just kind of, knee-jerk reaction, sell off the US dollar, that little bit of worry in the market, okay, that's fine. And then obviously sort of US dollar continuing to sort of dribble around, and so they go, hey, let's buy this up here. Certainly, Asia session has been a little bit more sell US dollar recently. So I'm not surprised at this thing dribbling down here, and then we see Europe and US sessions kick off, and they buy it up again. So I think, at least in the short term, look, you do have a little bit of a level through here. This sort of 33.80. So I think any sort of close down underneath here puts it in the warning. There's a little bit of a triangle here. We've only got two touches either side to really confirm this, but this is a little zone through here as well. So I think probably to be safe in that, you probably want to get down underneath 70. 70 seemed to be the line yesterday. It was just holding, then moved off. So 80, and then, but the thing is, it can come back down here and then sort of bounce back up. So I think to have better assurity that this is just a little bit of a fake flare up and we could be moving back down at least to test that 50, I think that's the trade through here underneath 70. So a little bit of way off of 87 now. But again, if we see US dollar sort of push up, there's a good chance we see gold come down. Doesn't mean it's going to break down all the way over here, but it just means that we can sort of pick out some higher sort of ranges for these sort of things as well. Kind of those highs there. I mean, technically high. But anyway, the point is, I'm looking down underneath 70. I think that'll sort of give you a bit more sort of surety that you're coming down, and then you look to sort of come back and test those 50s levels. Undoing these and this is the thing with these headlines, it's kind of like because nothing's actually changed. It's just like, oh my God, oh sweet, he's foreign cook, buy gold. It's just like, oh, hold on, wait, is that the end of the world? Is that really what's driving the whole market at the moment? I don't know. And then they'll undo it. So I would say that's a reasonable target, particularly underneath 70, is just to undo that move where you saw that sort of Cook headline come out yesterday. Silver held where it needed to hold, but it is, as I say, I keep covering silver and saying I'm not interested. And this is why, I mean, look, it almost held perfectly, pretty much to the center of this falling um, potential sort of triangle falling resistance here, bounced off the top side of it, and then it's just running back into these horizontals. So there's so many things. That's the thing. Sort of at the moment, there's so many things in play. There's trend lines, there's horizontals. There's no clear cut direction, and this is why you're sort of getting a battle of sort of like people that are trading trend lines. Well, there's a nice technical bounce, confluence of this horizontal, but then you run into another horizontal sort of thing, and it smacks it back down there again. So yeah, look, I'm still clear of silver for the time being. There's no sort of clear trade for me there. USD one. So this is another one that's kind of disappointing a bit. Like I was seeing, obviously we're looking pretty much like, okay, yeah, we're going to be coming down into the zone. I thought this would have been the play. I thought they would have sort of shot it up and then sold it down, but obviously they just straight sold it down. So it's holding the bottom level support down over here, but this is like quite a long time low. Going back to November 24, obviously we tested here just in July. But it's probably quite a significant level. Though, very interestingly, actually, we're really getting quite close to this big high time frame rising support. So this is a big one that's we've sort of seen coming from what's it called, sort of back in June 22, which could be leading to this big sort of triangle. It gets very messy around here, of course. Well, let's just take this stuff, put on the 4 hour. Below. It's a bit clearer. Um, you do have a bit of this sort of potential ascending triangle. So I would say any sort of breakdown lower here could potentially just find some support through this level here as well, which the reason I say it's interesting is because DXY actually has a very long-term rising support just underneath current levels as well. So both of them could sort of find some sort of short-term selling, but I think any sort of major sort of sell downs in that, like over the next month or so, potentially if we get those sort of like really shocking NFP numbers and they sell off US dollar, it could find some support, quite strong support as well there as well, because this is on the daily. Or maybe let's look on the weekly. Yeah. So if you have a look at that on a weekly, that does kind of paint the picture of potentially like a big ascending triangle, which obviously sort of would be taking you back up towards 735. So I mean, look, it's a bit wishful thinking maybe at the moment, but again, this is all just about sort of planning it out and sort of going through the different sort of time frames. In short term, you want to see it hold this level. Should it break down here, there's your supports not too far underneath, so 711 at this stage, where we are at 715. Though, in saying that, I do think this area will hold for now. But as you can tell, it's pretty much just grind, dribble. And so we could probably just expect some grinding, some ranging through this lower level here as well. And copper. Copper, I've said the last couple of days, particularly it's in no man's land. And this is the thing, as I said, everything's just ranging and chopping back and forth. Same with the silver. But you've got conflicting things happening here. You've got this little sort of channel that was coming up sort of off the lows, broke through, test the underside. Then it had this little short-term falling resistance here. And now that's using this to sort of bounce off on the other side of it as well. So I think until you go above these levels down here or up here, I don't think we're going to have direction. So as you can see, it's just really starting to form a little bit of a range there as well. I am still probably looking downside on this, but to me, it's as I said, till you get underneath 446, I think it's just chop city with a lot of these sort of things. End of the month, as I said, end of the month, end of summer at the end of the month. So we could start to see a little bit more of these things break and give us some actual true direction over the next couple of weeks, I would say. All right, that's it for me, mate.